Hello everyone, this is Jimmy Singh, broker owner with Supermax Realty. Welcome to my channel Real Estate Edge with Jimmy Singh. So the theme of this video today is Anxious Sellers, Tough Market of 2025 December. So since the recent rate hold announced by Bank of Canada, lots of my clients, especially sellers and some of my subscribers on my channel, have reached out to me personally how to navigate 2026, what are the strategies, and what they should do if they bought the house in the peak of the market, which was 2022 first quarter. They bought in 2021 or pre-booked a house in 2022, which have gone down in value and they have lost equity. See, in this market or this year, I met a lot of people who successfully sold their house. Some people took some losses, but many of them can't take the houses and they keep believing and hoping that with the rate cuts, market will bounce back and they will recoup all their losses. But it never happened. And I've noticed another thing is many of the people, especially the newcomers who jumped in real estate market in early 2010s, they saw a bull run for a decade. They see real estate market going up consistently 5, 6, 7, 8% per annum, and they see investments doubled in a couple of years. And some of them, they overpaid a little bit, but they got away, because the market was rising, economy was good, immigration was booming, hundreds of thousands of students are coming, they need a place to stay. And especially in our greater Toronto area, Golden Horseshoe, with a lot of students coming and joining the colleges, they need a place, and a lot of people opened their doors and houses and rented those basements or rooms and benefited from all those gains. And I also know a lot of people who made lots of money flipping houses, assigning contracts, making 100,000, 200,000, including builders who out of nowhere increased the price 50, 100,000 just at the drop of the hat before a launch. So everybody took benefit. But after 2022 first quarter, it's now 3 years and our market is still very sluggish because fundamentally things have changed in Canada. Government start putting policies. First they put foreign buyer ban, then they tighten their noose on lending, and over the time they keep bringing some policies which put a damper on our real estate market. And this year and last year was obviously cutting down on international students and certain of those programs. So all those days of quick profit, making 100 grand flipping houses, are gone for now. And I can tell you guys, if you're in a market, be very careful what you buy. Work with a knowledgeable, experienced agents who have seen highs, lows, pains in this market. I've been selling personally real estate for over 20 years. I have seen these cycles, come and go, but this cycle is a little bit longer as compared to the previous ones. So if you're buying a property, always, visualize what if I have to hold this property for next 5 to 10 years. See their layout, see the floor plans, and if you're a first-time buyer, unsure about a new pre-construction condo or a townhouse floor plan, ask your realtor to take you for a home tour for physical product, maybe 5, 10 year old houses, so you can physically see the spatial arrangement. How big is 10 by 10 room? If a condo is 600 square feet, or if it's a narrow layout, especially stacked town houses, how would those three level fit my furniture? Would it help my family if my older parents come and live with me? Can they climb three set of stairs and live in those stacked townhouses? So make a decision, but this is the market to hold. And I'm a firm believer, the next decade, real estate millionaires will be made in this market. Mark my words, 2025, 2026, 2027, there's a lot of good opportunities, lot of good deals. I'm also looking good deals for myself. I did some transaction earlier this year as well. I'm always looking for the market when there is fear, when not everybody is lining outside the builders offices, and 20 people are not bidding on the houses. So I see it's a great opportunity, and I have many clients calling me and buying these kind of investments for long term. You have to understand, guys, there's some numbers I want to share with you. 30% people in Canada, their houses are paid off. They have zero mortgage on their houses. 30% population in Canada rents, and 40% people have mortgages. Yes, sometimes media scare us saying people have $1 million mortgage, but here are the facts. Equifax says average Canadian mortgage balance as of early 2023 was $350,000. People in the age group of 35 to 40 years, their mortgage balance was $466,000, and people in the peak buying years of 45 to 50, their average balance was 434. So people are not carry heavy mortgages. Yes, there are some people who get caught on in fear of missing out. They bought bigger properties, are carrying 800,000 900,000 mortgages. I'm not talking and focusing on those people. I'm just focusing on average Canadians. How much debt are they carrying? So the real pain I see, are some families struggling who lost their jobs, and they are seeing now uptick in their mortgage renewals. They are feeling all the shock, but folks, it is not the end of the world. Eventually, things will turn around gradually, steadily. We will come out of this mess. You have to be patient. And one thing I always recommend people is right sizing your home. So, in this downturn, if your family is affected by job loss, or you have a renewal where you can't sustain your monthly cash flow and the house is too big for you, just ask yourself this simple question: my situation have changed. Can I still afford this house? If you're not good financial condition at this point of time, you have to make some tough decision. Downsizing or right sizing might be one of them. It makes your life easy, and you are better off financially to weather off this real estate storm. Guys, there's no shame. At the end of the day, you just build yourself. If some of you have lost their jobs, maybe go back to trade school or upgrade your skill set. You can always buy another house. I give you a simple thought. I was having a discussion in the morning. One of my clients, their kids have moved to university. They are paying $15,000 in annual property tax. So I was like, you will be paying close to 60,000, 70,000 tax in next 5 years, depending. Some of the cities are increasing 6 to 8% annually their rates. You rather take that money, maybe put in an index fund in stock market, or maybe invest. That's what I suggested. Maybe buy a small townhouse or a small square feet single family home if that is your need, or buy a right size of condominium if that is the lifestyle you're looking for. So this is the time, guys. You have to sit together and see where I'm bleeding money, how I'm gonna fund my retirement, how I can cut my cost. That is very, very critical. And recently, this month, one of the big brokerages in Canada, Royal LePage, is predicting a decline of 4.5% in Toronto and a decline of 3.5% in Vancouver in 2026, which is the next year. So, recovery won't be even. There are some places like Montreal, Saskatchewan, they are booming. At the same time, the bigger cities, which have seen a peak and a sudden rise in prices during pandemic, those 2 3 years, they are still in correctional mode. And some of people call me every week. They are in a negative equity situation, meaning if they bought a house for 700,000, now their house is down 50 to 80,000 dollars. They ask me, like, what if I walk away with all this situation where the house is worth less? Folks, you have to understand that your lender or bank can sue, and it can impact your credit score, which can hinder you again applying for a mortgage in future, seeking more credit, or seeking car loans. It can really mess you up for next 7 to 8 years. So always focus on ramification and talk to the professionals. And lastly, I want to talk about fear and doubt. They are the most powerful forces in life. But people who are successful, they take the same emotions, but they keep going straight and make bold decisions. Many of the people were expecting the rate cuts will trigger the home prices going up. I had office meetings with my realtors. I'm the owner of a brokerage. I told all my agents since earlier this 2025, especially after tariff, doesn't matter, government can do all the rate cuts, bring it down. Things have changed in Canada. When people are losing jobs, certain industries, trucking, IT are hurting. Some of the banks or industries are cutting middle management. Colleges are laying off their staff. People can't afford to buy. Even government is announcing uh, HST rebates. They are announcing tax rebates. Still, it doesn't make much dent. Why? Average folks in GTA, or as a matter of fact, if I take example of London St. Thomas, in London, average income of a family is 120. How they're supposed to get qualified for $1 million mortgage? If I take 4 times their income or 4 times five, average family can still afford 5 to 600,000 house. Lot of people want to buy a detached house. That's the number one priority. If they can't, they can buy a semi or a townhouse. The point is, lot of builders, because of their cost of construction or whatever reason, they start building $1 million plus houses. But lot of ordinary folks, even with the rates down, they can't buy those houses. That's the reason builders have canceled lot of projects. Their inventory is struggling, and some of them are offering 0% mortgages and all. But that is a big challenge in our market. So during 2021 2020 boom, there was an interesting talk show I was watching. Benjamin Tell, the CIBC chief economist, said for every 100,000 rise in a house value, people spend $5. So when you feel wealthy, every day your equity is going up, your neighbor is selling house, and you feel your house is now worth 100,000, 200,000 worth, you tend to spend more. You go out, take expensive vacation, buy expensive cars, but when you don't feel wealthy, you don't spend money. So that is the situation right now. Fear and doubt has cluttered people's decision making abilities. So next year, I was reading bank report. They said 5 to 6% of Canada's outstanding mortgages, which are 2.5 million, will face payment increase of 40%, and which is significant. So I personally believe next spring in 2026, inventory will grow. And another important factor which people have to consider, especially big markets in Ontario, is refinancing window has closed for Ontario. Because what is refinancing? Like, people in peak markets have seen their equity go up. They used to borrow up to 80% and either consolidate all their debts in a single monthly mortgage payment. But if their houses are down 20 to 30%, they can't borrow against their property, they can't refinance. So that is the challenge. And next year, the theme you will hear in social media or in the news is when the renewal cost for those 5 to 6% of 2.5 million holders will increase 30 to 40%. They will be wondering like how I'm supposed to take care of all the cash flow shortfall or my debt. Folks, the easiest thing is talk to your lender, talk to your bank, talk to your broker. Try to find a solution and until your life stabilizes. Go to a banker and say, "Hey banker, my wife lost a job and my income is still the same, and suddenly the cost of mortgage suddenly rose 30 to 40%. What can you do for me?" They might find a solution. They might increase your amortization up to 30 years. I don't know, maybe they can give you a break in your payments. But banks are always willing to work with you, so don't wait till the last minute. If you know your mortgage renewal is coming in February or March, and now we are sitting in December of 2025, be proactive, pick up a phone, call the lender, and try to make a deal. See what he can do for you. Bankers don't want your properties. They don't want to foreclose or put on power of sale, and they are willing to work with you. So there are still, guys, gray clouds in our real estate market. Eventually, gradually, things will get better. I'm always optimist guy. I always believe in having a plan A, B, C. If you're looking to buy any property in coming year 2026, three things keep in mind. As I mentioned, careful what you're buying. Small condos, 500 square feet studio condos, you can't raise your families. Investors, they got burned in condo market. Some people paid 13, 1400 square feet, and now you can buy and resale pretty much 800, 900 square feet. So they are not coming back in that market. If you're looking to buy a stacked townhouse, before you buy, go see physical, the layout, all the three levels, see how the configuration orientation is, and have candid conversation with your partner or spouse or family, and see if you have to hold the house for 5 years, provided a market remains stable and flat, would you be okay with that? And if one of you lose a job, can you sustain that property without any help from the tenants? Till then, folks, next time, this is your friend Jimmy Singh, broker of record, Supermax Realty. If you were first time watching my video, please subscribe, give it a like or thumbs up. And if you want a free market evaluation of your property anywhere in Greater Golden Horseshoe, Greater Toronto, Kitchener-Waterloo, Brampton, Mississauga, London, St. Thomas, give me a call. My number is 647-961-2639. Thank you and talk to you soon. Bye-bye.